Yes, sir.
Now, let's review it. The following trust funds to be managed by Wazobia trustee were created on January 3rd, 2013 with the following amount stated below. We are giving Kola Foundation 5 million. We are giving Ajayi Scholarship Foundation 10 million. Laji Children Fund 15 million. On the same date, investments were made on this fund as follows. Kola Foundation, 400,000 unique shares of 1 naira each were purchased at 4 naira each. Ajayi Scholarship Fund, 1 million Banga shares were purchased at 3 naira each. Laji Children Fund, 1,685,000 shares of stocker were purchased at 5 naira each. B part of the question says other transactions during the year were as follows. We're given the details of the expenses. Roman figure 1. Expenses on Kola Foundation, 700,000. Roman figure 2. Scholarship award under Ajayi Fund cost, 900,000. Then we have Roman figure 3. 450,000 shares in stocker were sold for 2,500,000. Required. Write all the trustee accounts relating to this transaction in the book of Wazobia trustee, showing the fund account and investments separately. Can you hear that? Fund account should be separated from the what? Investment account. They are not meant to be the same thing. They now say prepare consolidated balance sheet for the funds. Now, how do we go from there? Now, let's go back to the solution. Do we understand the question? Is the question clear?
Yes, sir.
Okay. Now, let's look at it from the solution page. I prepared the solution that day, even though the network was poor. This is the solution. Wazobia trustee, we created Kaulak account, debit credit, this is the ledger account for Kaulak account. We created Ajayi. Can we see it? Can we see it?
Yes, sir.
We also created that account for Laji Ajayi. That one is also 10,000. We also have what? Laji 15,000. That is the separate account. We also created bank accounts where we have the money that's being paid by each of these organizations were paid into the bank account. This is the bank account. Can we see it? We have the 5,000 by Kaulak Foundation. We also have the one of that Ajayi scholarship, 10 million, which is Laji also paid 15 million. That one being debited. We credited their own account. We debited the bank account of the Wazobia trustee. That is what it means. Then, from the money they pay to that account that the Wazobia is managing, Wazobia now invested the money in the following what? Investment. The unique share for Kaulak bought at 1,600,000 stated here. Banga share also purchased by the purchased Banga share on behalf of Ajayi investment. That one is 3 million. They bought stocker share for Laji investment. That one is 8 million. 425,000. Is it clear? We also create investment account for each of those investments. We credited the bank account for each of the investments, while we debit the investment account for those investments. The first one, the unique share for Cowland, that one is 1.6. It's been stated here. We also have the one of the Banga share. That one is 300,000. 3 million. It's also been stated here. While the one for Stoker, which is for Laji, that one is 8,425,000. Everything being stated under their own personal investment account. Then we also have other information given to us that they said we should work on. We have Kaula expenses account. That is, they paid expenses on behalf of Kaula. That one is 750,000. Then it meant to go to income and expenditure statement, which we have here to close the book of accounts. Then we also have what? Ajayi Scholarship Award account. That one, they paid 900,000 on behalf of that what? Ajayi for scholarship award. Then we credited the bank account, we debited the Ajayi Scholarship Award account, which is here. Then investment disposal account. From the Stoker account investment, they disposed some of the investment. The cost of the investment disposed were also being given. Why the amount they received, this is the cost of that investment. Why the amount they received from the investment that they sold is 2.5. The difference between the two is this, which is the balance. That one is going to income statement account, which is this. Then we now prepare the income and expenditure statement. We have the income side, we have the expenditure side. What are the income to be recognized? We have just only one income, which is gain on investment, 250,000. Then expenditure, we have the one of the Ajayi, we have the one of the Kaulak, which is 900,000 and 750. We add it together, less from this. We have the deficit of 1.4. That deficit, we now meant to prepare the statement of financial position. We have the assets, the bank balance. When we balance all the transactions in the bank, we have what? The investment we sold, we have it here. Then when we compare the debit side with the credit side, this is the closing balance of the bank account. That is what we call under the asset. We have the bank. We also have investment. After deducting the one they disposed, the balance of the investment at the end of the day, out of 8 million, they sold 2.25 million. Then they have a balance of 6,175,000. That is part of the investment. While other investments are saying that the one of 5 million, the one of 10 million. Sorry, the one of 1.6 million and the Bangashi, which is 3 million. The balance of Stoker is this. Adding it together, we have the total investment of 28,600. While all the funds we gathered from all the organizations, 5 million, 10 million, and 15 million, we have 30 million. We take out the deficit from the income statement, which is how much? 1.4. When we deduct it, we have 28,600,000. If you don't understand it, let us know. Know what we are meant to sort out. Oh yeah, look at the question. What's your opinion on that? Look at the solution and the question. What's your opinion? If you don't understand it, let us know. We know what we are meant to do. Hello, class.
Hello, sir. Yeah, and the
Yes.
last class, I don't know, maybe it was my network also, but we didn't we didn't finish the calculations last class. So I'm surprised to see
That's why
now.
I'm saying that I finished the calculation that very day. This is the solution. Look at the solution. If you don't understand it, let me know. We know what and what we are meant to do.
Okay, sir.
Look at it. You can look at it. I will now be telling you what we have done one after the other. Because that day, the network was bad and I don't want to stop. I was solving it in the process. If you have any question you want me to watch, to look into, no problem. I will look at it. I don't like using the prepared solution, if not because of the network for that day. And I don't want to stop. That is why I have this prepared solution. Others, if you don't understand the question with the solution, let us know. We will know what to do. And if you are okay, no problem. Jasita, are you okay with the solution? KD, are you okay with the solution? Lukman, are you okay with the solution? Mary, are you okay with the solution? Let us know. Aleza, are you okay with the solution?
Please carry on, sir.
Okay. You can carry on, Abi.
Yes, we can carry on. If I have any question, I might ask out of class because I just joined the class.
I will forward the solution to you. Go through it. If you are not okay, let me know. But today's topic we are meant to look at is cash work management. That's where we are looking at. If not because of network for that day, we'll have been able to move to the next topic now. Take your time to check before we finalize it and move on to the next level. Your success is our concern. If you have any challenges, talk. You can be able to find solution to the problem before it's going to be too late. Okay, let's look at cash management now, please. When we hear the word cash office is an office put in place by an organization. Is an office put in place in an organization for cash transaction purposes. Their duty is to receive and do payment of cash. That is their primary objective, to receive cash and also to make what payments. They are also meant to post transactions into the cash book. That is one of their functions. They are also meant to manage the bank account of the organization. They are meant to manage records. They are meant to manage documents of the organization and provide necessary information as regarding to the cash position at any point in time that the information is required. Now, looking at cash office, security is essential. This includes what? Provision and partitioning of the cash office cage in order to restrict the what? An outsider to be able to know what and what is what happening in there. They normally put restriction that this office is only meant for the what? Authorized staff. Non-authorized person cannot allow to enter. They are trying to create what we call security. Now, aside that, they always put in place what we call internal check as cash office is concerned in order to reduce error or in order to what? To minimize fraud in terms of cash operation. Aside that, updating of record on a daily what? Basis with regular supervision. Maintenance of adequate cash control and also keeping of cash in terms of the cash limit That is one of the what internal control under management that they are meant to put in place. There must be what we call cash limit, the cash you can hold on to. If you hold on more than that cash, then your line manager can what sanction such a person by giving him query. Installation of what alarm. They normally put in place what we call alarm. Periodic what surprise cash count. At every month's end, they need to do what they call stock count. In the process of counting stock, they are also meant to cash cash. Cashing cash, there must be what we call cash certification. They will satisfy and sign, knowing the amount of the cash, both in the bank and in what in the at hand at that particular period of time. In case there are issues, they can be able to trace back what is the balance and what is the total transaction you have received for this particular period. All these are function and security control. What are the books of account or the accounting entries that are meant to be what managed, or books of account to be managed in the cash office? They are meant to manage cash book. They are also meant to manage bank accounts. In the process of doing that, they are meant to reconcile the cash balance and the bank balance at any point in time. They are meant to what? To look into the what cash balance and the bank balance, and they will reconcile the reason why the difference are there. There are some transactions that are passed through the bank that doesn't pass through what that have not passed through the cash book. There are some transactions that are passed through the cash book that not pass through what the bank. All these are the reasons for the differences. Now, in that process, it is the duty of the account officer to do reconciliation. Now, in that process, in that regard, they are also meant to prepare what we call bank reconciliation statement. Bank reconciliation statement is a statement prepared in order to balance the differences between the cash book and the bank balance. What are the reasons that can bring about the differences in the cash book and the bank balance? 1, unpresented check. 2, uncredited check. 3, we have credit transfer. 4, we have direct debit. 5, bank charges and commission. 6, dishonor check. 7, standing order. Are we together? All these are the reasons why cash book might not have the same balance with the bank statement at every month end that they are meant to submit. They are meant to give what bank, but it is the duty of the account officer to balance the account. There are 2 approaches to bank reconciliation statement when you are preparing it. We have what we call direct method. We have what we call indirect method. Under the direct method, you prepare the bank statement without adjusted cash book. Under the bank statement, you prepare bank statement without what adjusted cash book. On the other hand, when we look at it from indirect method, you prepare the adjusted cash book and also prepared the bank statement. Those transactions that are passed through the cash book don't need to be in the bank statement, bank reconciliation statement. There are many reasons. There are errors. Errors too can also cause what? Discrepancy between the books of accounts. These are the reasons why you need to reconcile your accounts with all the documents and the cash withdraw from the bank after proper authorization. We talked about the authorization, so I don't want to talk about it. We talk about the vouchers, and we also talk about the warrant that meant before cash can be what issued out or paid out. All these are what we have discussed. then the documents that are meant to be managed by the account officer is meant to manage the cash book, is meant to manage the bank statement, is meant to manage the check book, is meant to manage the check stub, is meant to manage the check summary register. All these are the documents to be managed by the officer. These are the documents. We have the cash book, we have the treasury receipt cash book, we have the summary, we have the other cash book, we have the payment voucher, we have the local purchase order, we have what we call postal order, we have what we call money order. All these documents are meant to be managed in the cash office. Now, we also need to take document period for retention, which is what we have discussed it. Financial warrant cash book, we have the revenue collector cash book. All these are necessary. That lower, which I've made mention of them in there also. Now, maintenance and adequacy of cash control measures. What are the cash control measures that meant to be put in place? Look at it here. We have establishment of the cash limit, daily banking of all takings. We have periodic surprise of cash counts. We have provision for safety that has to be under the dual control. We have installation of red alarm. We have what we call red alarm. We have what we call installation of counting and sorting of machine. There is what we call counting machine. All those ones are meant to be put in place. We have what we call ensuring the what? That sufficient and adequacy insurance cover all the cash limits being put in place. We have investment of the idle fund. If there is excess, such should be what? Invested. We have what we call establishment of what we call authority limits. We have balancing of cash book on a daily basis. Preparation of the bank statement. We've discussed what the bank statement is all about. Look at it here. Document required for the preparation of bank statement. These are the documents required. We have what we call the cash book. We have what we call check summary register. We have what we call the bank statement. We have the check stub. We have payments, pay-in slip. We have what we call last bank reconciliation statement, debit and credit advices, all and vouchers. All these are what? The documents required for preparation of what? Bank statement. Now, we also talked about what? Taking or extraction of cash book balances at the end of the month for you to prepare your cash book. All these are what you also need to look up to. Reasons for bank statement and the cash book not balancing. Made mention of it. Unpresented check. We have on credit in the bank, not in the cash book. We have on credited check. We have what we call debit in the bank, not in the cash book. All those reasons are reasons for discrepancies between the cash book and the bank statement. Now, in addition to this, I also need to take my time to discuss error. What do we mean by error? Errors are mistakes committed in the process of what? Balancing or posting of figure in the book of accounts. Errors are mistakes that are meant to occur in the process of entering the figure on the books of accounts or balancing of accounts or transferring figure from one account to another account. Now, we have two types of error as cash book is concerned. What are these type of error we are referring to? Are we together? What are the types of error we are talking about? Now, we have error that will affect the trial balance and error that will not affect the trial balance. Under the error that will affect the trial balance, we have what we call error of single entry. All these are things that are likely to occur when you are preparing your bank reconciliation statement. You know how to correct those errors. Aside that, we have errors of what? Transposition error, partial omission. All these are the likely errors that are meant to affect the trial balance. Now, when we look at the errors that will not affect the trial balance, what are the errors? We have complete omission. Error of what? Complete omission. Error of complete omission. Error of commission. Error of commission. Error of complete reversal of an entry. Error of original entry. Error of what? Original entry. Error of principle. All these are the errors that are meant to, that will not affect the trial balance. And I think you have idea of them in the past, but because of the situation you have forgotten, that is why we are making reference to them. In that process, we can see some of that situation as we are going, solving questions. Do we still remember how we prepare bank reconciliation statement? Or you need the format?
We need the format, sir.
You need the format?
Yes, sir.
Okay. Let me see how to add the format here for you. Then bank. Now, for the bank reconciliation statement, we have, if it is direct method, we use balance as per cash book. But if it is indirect method, we use balance as per adjusted cash book, depending on what you have picked. Balance as per adjusted cash book. Add or deduct. On presented lodgement. Under here, we have unpresented check. Unpresented checks. We have bank error. We also say less uncredited lodgements. Then under here, we have uncredited check. We have bank error. When we now less it from the total we have there, what we are going to get, it should pass to us. It refers to as balance as per bank statement. This is what we refer to as what? Indirect method. When this group prepared, we refer to as what? Indirect method. Any question? Hello? Any question?
As for me, sir, no, sir.
Okay. Now, I will also tell you the one that has to do with what? Direct method. How that one look like. All those transactions you are meant to recognize. You see them now. Now, let's look at it from what we call direct method. What are the things to be considered under the direct method? Are you all with me?
Yes.
Now, what we are only meant to have transaction to this one, to that bank. This one, you will not. Let me use another page. Not going to be not lead to condition. When you are using direct approach, I pick up this one. Now, nothing will change. Adjusted bank reconciliation statement. Nothing will change there. Balance as per adjusted what? Cash book will not appear. What will appear there will now be balance as per cash book. That's what you put there. Balance as per cash book. Now, what are the other things to be considered here? All those things that are meant to appear at the debit side of the adjusted cash book will appear at the will be added under the unpresented lodgement. What are those ones I've listed here before? Credit transfer will appear here. Credit transfer. Followed by dividend. Undercast received. Overcast payment. At the other side, where you are making deductions, this will appear. Now, under here, we will have bank charges, standing order, aside that, we also have under cash payments, we have overcast receipts, dishonor check, we also have direct debit. You also take care of that here, deductions that they did in your account. This is how the direct methods look like. Any question, please? Any question?
No question for now.
Absent of no question. If we have no question, then we can look at the question what page. Look at question number 1. Can we all solve it? Let's look at question number 1. Can we all solve it?
Yes, well,
What do you say? Can you see the question?
I can't see the question.
Can you see the question now?
Yes, we can see it now.
Now look at question 1. Can you solve it? Cash book of Zulu local government show a debit balance of 502,000 as at 30th/9/2000 and X. However, the bank statement shows a credit balance of 505,000. On investigation, the following were discovered. Check number 51522 and 32552 for 2,000 and 3,000 respectively have not been presented for payment. That is what? Unpresented check. B. Interest on investment on 1,000 has been posted into the cash book, has not been posted into the cash book. A sum of 2,000 paid into the bank account was credited only after the bank statement was issued. Bank charges of 1,000 have not been recorded in the treasury cash book. How do you reconcile as the account officer in the ministry? You are the local government accountant. What will you do? They now say you are required to prepare bank reconciliation statement. This one does not require you to prepare what? Adjusted cash book, only bank reconciliation statement. What do you do? Are you with me?
Yes, sir.
Yes, sir.
Now, let's go to the direct method we have what? Adopted. Now, what's the name of the organization? Zulu what?
Zulu local government.
Okay, let me.
And the question is on page what, sir?
The page of the question.
Yes, sir.
Page 48. Have you seen the question? Have you seen the question?
Yes, sir.
Now, be reading the question for me now. I'm using direct method. Can you see the solution page?
Yes,
The
sir.
exact page. Zulu local government. It is that format given to you. I'm also using now.
These people they enjoy fireworks. So they get all this.
Balance as per cash book. What is the balance as per your cash book in the question? Balance as per cash book. Do you have any balance as per cash book in the question given to you?
Yes, 502,000.
That is the balance as per cash book. 502,000. I'm using that format to don't be as if I'm deviating from the format given to you. Now look at the. You are also giving balance as per bank statement, Abi. Is that not so?
Yes, sir.
Yes.
What is the balance as per bank statement?
505,000.
That is what we are working towards of getting. Now, what are the other information given to you?
The bank had paid 40,000. Oh, okay. No, check numbers 51522 and 35552 for 2,000 naira and 3,000 naira respectively have not been
That is
presented for payment.
unpresented check. Is going to appear under the what? Unpresented lodgement. Is that clear? Then we have two unpresented check. This is how we do it. Can you give me the check number of the first one? Unprecedented check, first check number.
51522.
515 what?
22.
522.
Yes, sir.
How much is that first one?
2,000 naira.
2,000 naira. You put it here. The second check number.
32552.
32552. How much is that one?
3,000 naira.
3,000. What else again?
Interest on investment of 1,000 naira has not been posted into the cash book.
Okay. They did not post it, but are not meant to post it. That is complete omission. Interest on investment. How much is that?
1,000 naira.
1,000. What else again?
A sum of 2,000 naira paid into the bank was credited only after the bank statement was issued.
That one is what? Uncredited check. That one is uncredited check. Is that clear?
Yes, sir.
Put it here, uncredited check. How much?
2,000 naira.
2,000. Okay. What else again?
Bank charges of 1,000 naira have not been recorded in the treasury cash book.
Now, what else again?
That's all, sir.
Now, those ones that are not here, let's delete them. Does it balance?
Yes, sir.
That is how to go about it. Any question? Any question?
No, sir.
Can you do the second question yourself? Check. Look at the second question. What do you say we should do there?
Adjusted cash book and bank reconciliation statements.
Okay. Now, let's go there. Now, let's look at it together. Then we should prepare the adjusted cash book and the bank reconciliation statement. Now, let's read the question. What's the
The
name
cash
of the
book,
organization?
Igwe local government.
What do you call it, Guyabi?
Yes, sir.
Now, let's read the question.
The cash book of Igwe Local Government Council has a credit balance of 21,000 naira on 30th June 20XX.
A credit balance, Abi. Cash book has a credit balance. When a cash book is having a credit balance, that's what? Overdraft. Is that clear?
Yes,
Do you
sir.
understand what it means? Continue.
The bank statement showed a debit balance of 56,400 naira. An investigation into the difference in the figures reveals the following statement. The bank had paid 40,000 naira on 29th June by way of standing order. B. A check for 103,700 naira sent to a supplier on 30th June was not paid by the bank until 6th July 20XX. A check valued 168,000 naira paid into bank on 28th of June 20XX was not credited till 3rd of July 20XX. On 20th June, a check for 11,400 naira received from an insurance company was posted in the cash book as 71,400 naira. 130,000 drawn from the deposit account had been shown in the cash book as withdrawal from the current account. Bank charges of 1,100 shown in the bank statement had not been entered into the cash book. You are required to prepare the adjusted cash book and prepare a statement reconciling the amended balance with the one shown on the bank statement.
Okay. Do we understand that question? Hello? Is the question cleared?
Yes, sir.
Now, let's now pick it one after the other from the beginning to post. I can be able to analyze one after the other. So you start from the beginning.
Okay. The cash book of Igwe Local Government Council has a credit balance of 21,000 naira on 30th June 20XX.
21,000. We've entered it here. Can you see it?
Yes, sir.
Can you see where we posted it?
Yes, sir.
The next one.
Sir, what page is the question, sir?
Page 47.
Second question on the same page. Question number 2 on the same page I gave you the other time. Continue.
So I have a question. If it was not a credit balance, will
The
it be on
debit
the
balance
debit
is going to
side?
be at the debit side.
Yes, sir. The bank statement
Okay.
showed a debit balance of 56,400 naira. So
That
an
is what we are working towards of getting now.
So an investigation into the difference in figures reveals the following information.
Okay.
A. The bank had paid 40,000 naira on 29th June by way of standing order.
Standing order. How much?
40,000
How much is
naira.
standing order?
40,000 naira.
That's all. The next one.
A check of 403,700 naira sent to a supplier on 30th June was not paid by the bank until 6th July 20XX.
What that's supposed to mean?
Uncredited check.
They issue out a check to a customer. Is that not so?
Yes, sir.
A check for 103,700 sent to a supplier. They issue a check to a supplier on June, was not paid by the bank until what? Which means that particular person did not present the check until July. They issue it in 30th June, but the person did not pay until what? Did not present the check on the what? On July. See, I mean on the what do you call it? The check was presented in July 6th. That is unpresented check. Is it clear?
Yes, sir.
The next one. We are not going to enter that one in the cash book at all. It's going to appear in the bank consolidation statement.
A check valued 168,000 paid into the bank on 28th June 20XX was not credited until 3rd July 20XX.
That is uncredited check. Okay.
On 20th June, a check for 11,400 naira received from an insurance company was posted in the cash book as 71,400 naira.
That is overcast what? Received. The check was what? 11,400 received from what? Insurance company. That also was posted in the cash book as 71,400. The overcast what? Overcast receipt. You now go to the what? Overcast receipt. Look for the difference. What's the difference between the two figures? 71,400 minus 11,400. What do we have? 60,000. That is overcast receipt and error in the cash book. The next one.
130,000 naira drawn from the deposit account had been shown in the cash book as withdrawal from the current account.
What do you say?
430,000 naira drawn from the deposit account had been shown in the cash book as withdrawal from the current account.
What type of error is that? They withdraw money from the deposit account, but they now put it in the what? Current account. They withdraw money from that what? Fixed deposit account. The money is supposed to be deducted from the fixed deposit account, but when they wanted to post the account in the book of account, they now mistakenly posted it in the what? In the current account of the company. What that's supposed to mean? What type of error is that? That is error of classification. What do I call it? Error of classification. That's error of principle. Error of principle. Then we reclassify it back and put it here. We will go to the what? To the that account where the money was withdrawn rather. Then they will now credit that account and come to this particular adjusted cash book and debit it. They will now put it here as what? Fixed deposit account. 130,000. To make the account to be zero, because mistakenly they put the account at the credit side of this account before, but they now put it back. It now make it to be zero. That is how to go. Then they will go to the what? Fixed deposit account and credit the account back. Debit the receiver, credit the giver. That is what we have done here. Correction of error. The next transaction.
Bank charges of 1,100 shown in the bank statement had not been entered into the cash book.
1,100 bank charges. All other transactions will not appear. I remove them. Now, what will be the balance now? The credit side is lower compared to the debit side. Debit side is higher than what? Credit side. Total here, 130. Then we also come here. Closing balance, 130 minus the sum of the payments that they made out at the credit side. What do we have? We have 7,900 as the closing balance in our cash book. Now take that one to adjusted what? Cash book. Now, what are the unpresented checks you were given? How much is it? The unpresented check,
103,700.
100 and what?
3,700.
700. What else again?
Uncredited check,
Uncredited check. That one will. How much is uncredited check?
168,000.
168,000. Do we still have any transaction to post again? Do we still have any transaction to post? Hello?
So what about the bank charges?
We've done the bank charges here now. See, 1,100 in the adjusted cash flow.
11. You're going to pay that.
What do you say?
There's no
Hello?
more transaction, sir.
Okay. If we don't have any other transaction again, let's delete those ones that are not there. Then we balance the account. Rest of balancing the account, this is coming to this side. This is also coming to this side. We have 56,400. What is our bank balance? What is our bank balance?
It's
56,400.
Balance. That's what.
Hello?
Yes.
Hello, sir. Should I have a question, sir? Can you explain that the posting of the fixed deposit account, sir?
Now, you have two accounts, current account and fixed deposit account. Do you understand? You as a person, you are having two accounts. Fixed deposit account is an investment account. Current account is the business account. You now withdraw money from the fixed deposit account. When you want to do the posting, you now move down to the what? To the current account and deduct the money from the current account. And the money did not being what? Withdraw from that account. Is it clear? That is an error. What do? You pay the money back indirectly and go to the fixed deposit account and deduct the money. That is what we have done. In the fixed, we go to the we credit the fixed deposit account with that amount and debit money into the what current account back. The one we have what posted wrongly. Now, this is what we're saying. See, assuming this is your current account, I just want to explain. No, normally
Okay, sir.
in the exam, this is what you are meant to do. But to see the correction that I've done there, this is your current bank this is your fixed deposit account. Now, mistakenly, money is withdrawn from this account. Is that clear? But instead of them to enter it here, they now came here and put the money here. 130,000 has gone out. Is that clear? And the money is not from this account. We now meant to correct it. This account, this fixed deposit account, we come here and put current account here. This is the correction I'm doing. Current account. Current bank account. This is the mistake they made. Withdraw. They withdraw money from here. That's the mistake. Now, when we are doing the correction, we have moved to the that money where it went out, we move it out from there. We now come here. It says what? Please deposit account. What does it mean? 130 here, 130 here simply means zero.
Zero.
Is it clear? Simply means
Yes,
money
sir.
did not move out from this account anymore. It has gone to the account where the money has what? Move out. That's all. This, our adjusted cash flow, is one representing our current bank account.
Okay, I get it.
Is that clear?
Yes, sir.
Any question? Any question? Absent of no question. That question number 3, take your time to go through the question. By next week we are meeting. You will go and do what you think you can do on it. Then we come back to the class and look at it before going to the next topic. Any question? Absent of no question, okay, we can end the class now. When we are meant to meet next week, I want to look at your solution. From there, we move on to the next level. Thank you very much for part of the class. See you next week.
Yes, sir. Good night, sir.
Good night. I will send the solution to you guys.
Okay, sir.
Hello, Sake. Good. Okay, no problem.